90% of traders fail with order blocks because they drew a box on every single candle move. But the banks, they are not trading every pivot. They are looking for displacements. In this video, I'm going to show you the main threshold and the secret that separates a real institutional zone from a retail trap. If your order block doesn't have these three specific criteria, you are not trading with the smart money. You are the liquidity. So guys, in today's video, I'm going to teach you guys about order block. Now, order block is the last bullish or bearish candlestick before a very long and massive impulsive move. That is an order block. Understand? If you see any bullish move or a massive move, okay, now this is an example on GBP USD. This is a impulsive move. Let's take this out. This is an impulsive move. Price all of a sudden starts spiking to the upside. This black candlestick is the last candlestick before this move. Then you mark the wick up of it and the low below it as our order block. This is our order block. This black candlestick here is our order block. As easy as that. This is a bullish move because it's a spike to the upside, creating a break of structure from here to here. It's a break of structure. So therefore, this is a bullish move, and this is our order block. This last black candlestick is the last bearish candlestick for this bullish impulsive movement. Now, looking at this particular man over here, you can see a bearish impulsive move. Price was here. All of a sudden, price starts spiking to the downside, creating order block. Now, this blue candlestick here is our order block. This blue candlestick here is our order block. This is a bearish order block, and this is a bullish order block. This is also a bullish order block. Let's keep looking for our other blocks. I'm going to teach you guys how to find a valid order block. For you to have a valid order block, there must be a break of structure first. A break of structure must occur for you to have a valid order block. Now let's see this. This is our 15-minute time frame GBP/USD. Let's see this. What do we have here? We have a break of structure to the downside. From here to here is a break of structure to the downside. And after I see this break of structure to the downside, this is the order block. This bullish candlestick here. You can see you all can see this bullish candlestick before this bearish move. Before this big move starts happening, this big move, you can see that bullish candlestick residing beside it. That is your order block. Mark the wick and the below of it. You can see what price did. The price tapped into it and starts pushing, respecting it and pushing to the downside. This is our bullish order block. This is our bearish order block. So order block, there must be a change of character to the downside or to the upside to say that yes, this is a strong order block. In a case like this, where are you going to mark as your order block? Because you can see our continuation of the trend, which is what a break of structure is, the continuation of the trend. I've said that in my previous video. Go and watch, go and learn, so that you cannot be confused. So now this is a bullish order block. Yes, because this is the last bullish candlestick before the start movement. We can call this, but this is a weak candle. This candlestick is weak. This candlestick is weak. You understand? So we mark this like this. And what are we expecting after seeing this candlestick? We're expecting price to tap us into here. Price just tapped into this inversion fair value gap, because you can see price tapped into here and continue going to the downside. So let's keep on hunting for other blocks. So now this is our latest break of structure. I think a latest external break of structure. You have two types of break of structure: external and internal break of structure. You guys already know that already. I've taught that in my previous class. In everything I taught about the break of structure, go there and you're going to see the video. The video is below. You see it. Now, where are we going to mark our order block? Are we going to mark here? Are we going to mark here? And are we going to mark here? Which one are we using as a valid order block? Make a choice. Which one are we using as a valid order block? If you find yourself in such a scenario, what are you going to do? Now, first of all, if you mark this place as your order block, you are correct, because this is our origin. It's our origin. If you mark here, you are correct. Here and here also the same thing. You are correct. Price is already recently in our order block. Price disrespected this order block. Why? You pick up a Fibonacci 2, you measure from up down here. You can see this is not fully in a discount area. You understand? This is not fully in a discount area, which means we are going to use this big order block first as our main entry, not this smaller block. This is just look at itself. It's not all the football itself are not even in this particular area. Only small of it, only big. Let me say 10 out of 9 of it is inside. 9 out of 10 of it is inside this particular place. 1 out of 10 is outside here. So this is not a valid order block. Okay, so we'll be looking for a way to sell this market. This is what we have in our current situation to sell this market. But remember, this order block is being marked in the 15 minutes time frame. In the 15 minutes time frame, and any other block being marked in your 15-minute time frame, you are going down to your 1 minute time frame to look for your entry. If the other block is being marked in your 30 minutes time frame, you are going down to your 3 minutes time frame to look for your entry. If the other block is being marked in your 1 hour time frame, you are going down to your 5 minute time frame to look for your entry. If it's being marked in your 2 hour time frame, you look for confirmation in 10 minutes. 4 hour time frame, look for confirmation in 15 minutes. Daily time frame, look for confirmation in the 1 hour. Weekly time frame, look for confirmation in the 4 hours. Monthly time frame, you look for confirmation in your daily time frame. Yearly time frame or 6 months time frame, you look for confirmation in your weekly time frame, and your yearly time frame, you look for confirmation in your what? In your monthly time frame. That is how it's supposed to be scheduled and how it's supposed to be. So we'll be going down for in a 1 minute time frame to look for entry on GU. Now, what are we looking for on GU? We're just looking for a change of character to the downside, and boom, what a spike, and boom, we're entering. This is our liquidity, and you can see this place is so big. So let's refine this thing. Let's refine it. Refining it to here, I think. Yes. Okay, you can see it's even far from our main from our main candlestick. So liquidity, double top, which this candlestick now might sweep. You understand? There's just a lot of noise over here, so we're waiting for price to enter into this particular place, give us a change of character, and boom, we're in. So how do we get it? You can start. Okay, if price return back here, if price return back there, you can place your order. Yeah, you can place your buy order and see if it's going to take us here. Understand? But I don't normally trade in the 1 minute time frame. I don't know who does. Who trade? Are you trading in the 1 minute time frame? Leave 1 minute time frame. Let's focus on the main market movement. Let's forget the noise. Look at how 1 minute time frame is just moving, so volatile. Let's forget about the 1 minute time frame there. Let's focus on the future. Let's focus on the 15-minute time frame, 30-minute time frame, the ones that are clear, the ones that you can understand perfectly. So this is all for no, this is not all for other block. Yeah. Let's talk about the we just talk about the bearish other block. We're not talking about our bullish other block. Let's look for example to rectify that bullish other block. So what do you have here? Break of shutter to the upside. Where is our bullish other block? Where is our bullish other block? This is our origin that causes the break of structure, and that is going to also stand as our bullish other block. You understand? Okay. From here to here too might be our bullish other block. Remember how we did it? Pick a Fibonacci 2, measure it. Okay, now that we have two other blocks in the same discount area, you pick a Fibonacci 2 again. You measure the 50% of a discount area. That is where your entry should be, which is this down one, which is this down other block. So yes, that's it, and that should be where your entry is going to. This is going to be where you're going to be looking for your entry. You understand? You'll be going down to your 3-minute time frame to be looking for your entry from this particular side. I think this is a bullish example of a bullish order block. I've thought about other block before, so I don't know why I'm repeating this topic. I've thought about other block. Go and learn your other block. You may be wondering why this is a failed order block, because of there's no confirmation. There's no confirmation. That's why this is a fake order block. You can't just enter the market to start without confirming some stuff in the market. Hope you understand me in this video. Go back to my previous video and you will see where I thought about other blocks and so on and so more. I'll see you guys in the next video.